Hello, my name is Honor Lindsay Ingham, and I chose the Tesla company to do a financial analysis on for this Accounting 370 financial analysis class. Tesla company is a clean energy and automotive manufacturer. They produce electric vehicles, solar panels, and other eco-friendly home services. Their primary source of income, however, is from the car manufacturing side of their business. Their customer base is the middle to higher class adults that have an eco-conscious perspective. They are very careful about their carbon footprint, and Tesla is often fairly expensive, so your regular Joe can't afford a Tesla. Tesla's biggest competitors are Ford Motors Company, General Motors, and BYD Co., which is another Chinese car manufacturer. All of these are car manufacturers. Their income, again, is primarily through automotive sales. Their revenue has been increasing steadily over the last 3 years, as you can see in the revenues column. Their quality of earnings ratio has dropped from a 1.16 in 2022 to a 0.88 in 2023. That means that this could show that there are some unsustainable earnings. However, if you look closer at their numbers, you'll see at the bottom there is a benefit from provision for income taxes. They acquired a substantially large deferred income tax asset in 2023, which could be the cause for this discrepancy in the quality of earnings ratio. Their cash flows for operating, investing, and financing have been fairly similar and steady. There have been some minor to major discrepancies, however, over some certain years. Tesla's operating activities trends show a slight decrease due to a large increase in the deferred income tax. Again, Tesla acquired a deferred tax asset of about $6.4 billion. So there is a little bit less cash provided from operating activities, due mostly because of that strange discrepancy. Tesla's investing activities showed that $19 billion was used in 2023 for the purchasing of investments, while $12 billion was gained back for maturities of other investments. So their net cash used in investing activities has been going lower and lower, and it's typically because they have been purchasing large investments. However, there are some that are coming to maturity as well. Financing activities show that Tesla has a positive amount for the first time since 2021. However, a lot of this is due to their repayment of debt. In 2021, they had $8 billion from proceeds, but $14 billion was used to repay some of their debts. However, in 2023, they had $3 billion in proceeds, and they only used $1 billion to repay some of their debts. And it's funny, in 2022, they didn't get anything back from proceeds, but they paid about $3 billion towards the repayment of their debts. So they're slowly not repaying their debts as significantly as they did in 2021. Their ratio analysis is really provides a great deal of clarity on where they are financially. Their current ratio has steadily remained above 1 and above the industry average. In 2023, as you can see, their current ratio was 2.12, which means that they were able to cover their liabilities twice over with their assets. This is much better, as you can see, than their competitors, and they have remained consistently higher than the industry ratio averages. For the solvency and the leverage, you'll also notice that Tesla is performing well in its long term. Their equity either covers or almost covers their debt. Tesla's ratios are significantly lower than its counterparts, and it's well below the industry average as well, which means that its equity can cover its debts a lot more efficiently than you can see in General Motors and Ford, especially in the debt equity ratio. Ford has like 5 times the amount of debt than they have equity. And meanwhile, Tesla is being consistently lower over the last 3 years. In their times interest earned ratio, Tesla could pay their interest 64 times over. General Motors and Ford can pay their interest over, but not nearly as many times as you can tell at the bottom row. For their efficiency, profitability, and market value, they have a higher inventory and accounts receivable turnover than competitors. This is what you want to see. They have a shorter collection period. And they have a higher asset turnover than their competitors, which again is something that you do want to see. Going down into the profitability margin. Oh, I also wanted to mention that their average collection period is between 10 to 12. Meanwhile, General Motors and Ford is like 29 and 88, which is not the best. Well, at least not as good as Tesla has been doing in collecting their accounts receivables. For their profitability, they have a significantly higher profit margin than their competitors. Their return on assets and their return on equity typically have higher ratios. You'll see that General Motors actually has a decent earnings per share, especially compared to Tesla and Ford. So in that sense, they're actually doing better, and Tesla and Ford actually have a lower earnings per share than the industry average. So I thought that was kind of interesting. Their price to earnings ratio, Tesla's way up there, especially in 2021. That ratio just skyrocketed. Meanwhile, the industry ratio average is only 6. Meanwhile, they're 216 in 2021. That's pretty wild. Their market value at December 2023 was $248.48 per share. General Motors at the same time was $35.92, and Ford was $12.19. So there's quite a big difference between their market values at that time. And going into the market valuation, their market value of the shares has inclined and declined steadily through the last 5 years. The higher peaks are in the $400 range. They happened to be in November of 2021 and this past December 2024. Their market value hasn't dropped below $100 since August 2020. There are many theories as to why Tesla got so popular at the height of the pandemic. However, as we're going to see, it also raises some questions and awareness for their future. Their strengths, they are currently very financially strong. They're showing a strong and steady level of growth. They really set themselves up for financial success in the future. They have built a very strong brand name. They have a very strong reputation. They're known as a pioneer for technology advances and innovative car designs. They are exceeding their competitors in almost every financial measurement, as we saw in the ratio analysis. However, there is speculation because the huge market boom in the pandemic has caused the market prices to be considerably anywhere between $200 and $400. It hasn't really stayed at any kind of steady rate over the last 5 years. There is speculation as to whether they can maintain the humongous boom that they got during the pandemic over the long term, because it was such a dramatic rise in their sales. So it's kind of like, what is the future going to bring here, Also, on top of that, they are right now the technology pioneers. However, a lot of these other car companies are coming out with their own electronic cars. They're coming up with their own technology. So unless they continue to grow in their technological advances, they are going to face a lot more competition in that, and they might lose their title as the pioneer for technologically advanced cars. So for their future prospects, I designed this projected income statement for the next 3 years. As long as Tesla can maintain this growth, future prospects are looking up. Again, they've set themselves up very strong financially for their short-term and long-term, as we saw in the ratio analysis. Hi, honey. Hi. Sorry,
They're
we
mine
were
bubbles.
interrupted with a toddler.
They're
Hi.
mine bubbles.
Those are so fun. Okay, can you go play? Love you. I gotta brush your hair, kid. Anyway, research and development prices may be more because Tesla has expressed a wish to expand and explore more technological advances within the next upcoming years. So we'll see what that brings. That could also bring in more revenue, of course, if these technological advances really take off and produce more income. You also can see that they're starting to focus kind of away from car manufacturing and more into robotic technology. They're experimenting with like humanoid robots right now, and that's where a lot of their focus is going right now. So this change in focus may also alter a lot of this projected income depending on what Tesla chooses to do in the future and how successful they are in those prospects. For a biblical worldview, I thought that these two verses from Proverbs, the book of wisdom, if you will, was very fitting. Proverbs 21:5, you can see both kind of sides of the coin with this one. The plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty. As long as Tesla remains diligent and they continue their plans, they continue their growth, and they continue to work hard towards these technological advances and the developments and the plans that they have made, this could lead to a great thing for them. However, because they came out the gate so fast in 2020 and they kind of got rich quite quickly, there is kind of a risk factor there as going like, is this something that they can sustain and maintain over the long term? Only time will tell for that one. For Proverbs 14:23, in all toil there is profit, but mere talk tends only to poverty. So Tesla has all these ideas and plans, but they also need to make sure that they're putting them into action and that they're very diligent in keeping up with what they can do and what they can sell and the technological advances. It's going to be a lot of hard work for them to maintain all of this and to keep up their A game when the competitors are also gaining on their tail and there's all this other stuff going on in the world. So we'll just have to see what the next years bring them. Currently, though, it's looking pretty good for them, and I'm really excited to see what happens next. And that's all I have for you. Yeah, I hope that this enlightened you on Tesla and how well they're doing financially. And yeah, thank you guys so much for joining.